Welcome back to you guys. It's your boy Stan out there. Today we're going to talk about the Palantir stock. It has been on the lips of every financial guru lately. It has also been making the headlines of mainstream media. And while I was doing my research to understand whether I should add this particular stock to my portfolio, I realized a lot of people had been expressing their opinions and gut feelings when it comes to the Palantir stocks, but we could really use, I think, a cold analysis. I could not find it online, therefore I decided to perform it myself and to offer it to you guys so you can make an informed judgment in regard to whether you should add it to your portfolio as well or not. And looking back, I think it's just the ideal candidate to start off my new series on YouTube called Hot Stock Exposed. Now you will ask me, why is this company making the headlines right now? And this has to do with Cathie Wood betting big on the stock. For those of you who don't know who Cathie Wood is, I guess you were focusing too much on COVID-19 last year. And Cathie Wood bet in early 2020 that the Tesla stock would reach $4,000 by the end of 2021. Well, the rest is history, guys. It reached almost $4,500 per share. So while initially many laughed at her bet, she was the one laughing in the end and racking in some serious cash. All that to say that when Cathie speaks, investors listen, and that's only fair. But before we dive further into this Palantir analysis and I tell you whether I think the stock is actually a clear buy or a clear sell, it would be lovely if you guys could just smash the like button for the YouTube algorithm. And trust me, I will be forever grateful. Now that this is out of the way, so actually it's not so much in the end what Cathie said, but rather what Cathie did. Cathie Wood's investment fund ARK Invest bought 2.6 million shares of the stock back in early March. Next thing you know, what did she do? Well, she just increased her position, buying an additional 1.2 million shares at the end of March. The news came as a surprise to many, since the stock actually trades 40% lower than its all-time high of January when it was trading at $40. Now it is just above $23. Which in the end is still quite a performance when you think that Palantir stock actually entered the market at $9.5 per share. So it's actually almost 2.5xing. Now, as an investor, you probably wonder, just like myself, should I invest in this Palantir stock? It seems like there's a big dip and maybe I can take advantage of this situation. Well, guys, let me be straightforward here. If you guys are looking for the same kind of growth as Tesla achieved in 2020, meaning 10xing the value of your shares, this is definitely not the stock you should pour your money in. Well, first, we have to understand what is it Palantir does. I've done my homework here. This is how I would describe the company. Getting rid of all the fuzzy, fancy, trendy buzzwords we've grown accustomed to, Palantir helps companies, firstly, connect the various information systems and collect the related data into a central interface. Secondly, establish models to link related information. Thirdly, the most important part of the company, which is where value is created for clients. Palantir helps companies analyze the data to uncover patterns that can then be leveraged to reach a desired outcome. Now I know what you're thinking, we could definitely use an example. It becomes much clearer if you think of the first client the company has had, which is the CIA. Indeed, the company was created right after 9/11. Let's say you have access to banking information, browsing history, and phone records of suspected criminals or terrorists. If a central system allows you to link these different information, tying them to an individual, Palantir may help you understand that people who live in a certain area receive money from foreign accounts on a regular basis and are talking to certain individuals and consult certain websites are likely to commit a crime. Therefore, they can put these individuals under surveillance. This is what we refer to as a pattern. And Palantir has become an expert at discovering them. And the good news is that patterns are useful for every type of organization. It can help a company optimize the way it is run. It can help it increase the efficiency of its marketing efforts. It can help it optimize its supply chain. Possibilities are just infinite. How does Palantir build its clients? Well, that's a pretty hot topic. Even more since it's not entirely clear whether the company is a service company or a product company. For my part, I would definitely argue that it's a mix. It's a hybrid service product company. It actually sells you some piece of software, but then there's a daunting effort needed to establish models and connect various data sources, and this comes at a hefty price for companies because that means that an army of engineering consultants from Palantir is needed for each project. This strategy has an obvious pro, which is that once a client has spent so much money, the decision to ditch the solution and the associated costs is unbearable for the management. On the other hand, it means that Palantir can only serve very large clients. I mean, the average revenue generated per client in 2020 amounts to $5 million. Therefore, making business with Palantir is not something that every business can afford, especially not small and medium companies. Now, I see a major problem when it comes to determining whether investing in this stock is a real opportunity or not. On one side, yes, the big data market is expected to grow from 130 billion to 230 billion by 2025. And Palantir currently holds a 1% market share, which gives it room for growth in the future. But a very big chunk of the market, probably somewhere around 40% of companies, are SMEs, which do not have the kind of money required for this type of investments. So people should look for signs that costs will be lowered, and the company profile evolves through time as a regular SaaS company. Again, on one side, the company has contracts with government agencies, which makes the case for a stable basis of client and income. But on the other hand, only by reaching commercial clients will the company be able to grow its revenue. So in the next earnings report, I'm definitely going to look out for an evidence that the commercial client base is broadening. And lastly, yes, the fundamentals of the company are quite good, but the operating costs are still too high. And therefore, there's a long road for Palantir to reach the same level of multiples as competitors. So to wrap it up, guys, I would say that this stock is definitely neither a buy nor a sell. It might go down a little in the foreseeable future just because the owners are actually allowed now to release their share into the market. I definitely don't see it as some kind of owner escaping the boat kind of signal. The volumes tell otherwise. It's just an opportunity to take some quick profit. Now, if Palantir can bring down its operating costs, maybe through automation, then I am confident it will become a good value stock. Now, if Palantir can become more of a SaaS company or just manages to broaden its commercial client base, then I am sure Palantir is going to outperform the market by far, by a thick margin. If Palantir manages to do all three at the same time, bring down operating costs, become more of a SaaS company, broaden its commercial client base, then I am quite sure actually it will 2x until 2023. That is when I would go all in on the stock. Palantir is currently valued $40 billion by the market, and I think it could reach $100 billion at least in 2023. Well, guys, that was it for today. I hope you liked the content. If so, please smash the like button. I would be even more fortunate if you could just become one of my dear subscribers. I will definitely give you an update following the next earnings report. For the time being, stay safe, and until next time, peace.